in 1963.
At the same time as we coped with the doubled yen, we started to believe our ability had doubled as well. We took a positive interpretation. We began to think our value had doubled.
But then they encountered another setback.
Good evening. Stock markets around the world are reeling from some of the biggest one-day falls in share values ever recorded. In New York tonight, the collapse is worse than the worst day of the notorious Wall Street crash of 1929.
To the men at the Ministry of Finance, the stock market crash seemed another reason to stay on the course they'd chosen. They kept interest rates at their historic low.
The concern in Japan that the economy might be approaching the bubble stage, well, had to just evaporate. It was quite obvious that it is not a time to talk about tightening. I have to say that that was the only choice we had, only alternative we had. But anyway, but the fact remains that we made a mistake.
It was the second mistake. With money as easy to borrow as ever, land prices went on climbing, and the rising value of land fed back into the stock market and distorted that too. Japanese accounting allowed companies to pretend the rising value of the land their factories stood on was real profit. Whatever they were actually making, their notional real estate gains sent share prices spiraling upwards. They borrowed against their land, then issued company bonds to cover the debt. With interest rates still at 2.5%, money was virtually free.
As long as everyone's making money, you sort of forget, about fundamentals and things like that. And as long as the market was going up, people were getting richer and they were spending the money and they were buying real estate, they're taking over US companies. As long as the market was going up, everything was fine.
Stockbroking firms were doing best of all. The most dynamic and fast-growing was Sanyo Securities. They built a huge new trading floor hooked up to branches around the world. In a 1989 interview, their president seemed supremely confident.
I think the long-term trend will be that share values will keep rising. The private financial assets of the Japanese already exceed $7,000 billion, and they'll continue to grow at nearly $800 billion a year.
Sanyo's managing director was Michio Hayashi.
I remember several days when we made $1 billion in commission. That means our total sales were over 100 billion yen. We thought Japan was progressing from a trading nation with high technology into a finance nation with an even brighter future. Skyscrapers would be standing high in Tokyo Bay, just like Manhattan. The mood at that time was that there would be no end to it.
As long as shares were rising, ordinary Japanese were happily swept along. Millions of small investors played the stock market in their spare time.
It was stupid to leave your savings or retirement pay at the bank. Many of us wanted to do something better with our money.
Evening classes in finance were packed with eager students.
Those were exciting times. There's an important psychological factor dealing in stocks and shares. Even when you sold and made, say, 300,000, if the same share went up further and you could have made more, then you'd feel as though you'd lost money.
We were wondering what to invest in all the time. Whether it was land, shares, golf memberships or paintings, everyone had a go at something. If you weren't in the game, people thought you were strange. Actually, to be blunt, they thought you were stupid.
Despite the huge rise in land and stock prices, the government didn't intervene.
As you can imagine, when everybody was happy, it's very difficult to say that you are too happy, so you have to stop doing what you are doing now.
Exhorting the public to borrow, Japanese banks played their own special part in pumping up the bubble. They were desperate to offer new loans, but there was almost no scrutiny of what the lending risk might be. They pressed cash on their customers, and so long as land was there as collateral, that was enough. Branch manager AKINORI YAMASHITA was given an award for good performance in meeting the bank's goals.
I never advised my customers to take out a loan for realistic needs, like buying new equipment. What I did mostly was to set them up for new loans by stimulating their subconscious demand. That's where I had to make an effort. So our approach had nothing to do with the actual business of the company. Their needs were drawn out by the bank, and the company followed our plan.
The hundreds of thousands of small businesses who supplied the big companies were the mainstay of Japan's economy. By tradition, they were frugal and careful, but they became prime targets for the banks. To expand his metal plating factory, Kenichi Shigeta was talked into loans totaling over £1 million.
They used to push us to take up loans, even if we didn't need the money. With a business like this, sometimes orders go down, but you still have to keep the factory going. You need some working capital put aside, so you're encouraged to borrow a little extra. One example, when I asked for about 10 million I needed to buy new equipment, they came back and told me to take 15 million.
To safeguard their profits, it was in the bank's interest that land prices should continue up. Many banks became direct participants in the bubble through a system known as land pinball.
It's because the banks fund the deals. They finance a purchase of land for 50 million one week, and they finance the sale of the same land for 60 million a week later. 1 month later, the same bank comes up with 65 million for the same land. That's how land prices go up, just like pinball. It looked as though prices were going up normally, but at the root of it, there was a bank. They'd find the next buyer themselves, and they'd lend money to the purchaser after that.
By 1989, the public and politicians could see rising land prices were creating new divisions. Anyone already on the ladder, who'd owned land when prices started to rise, felt rich. But for families left behind, buying a house or flat seemed further and further out of reach, or might mean a 100-year mortgage. That December, the stock exchange index hit a new peak of nearly 39,000. Shares like land were at a giddy height.
Prices go up. Because they go up, people buy more. Then because people buy more, they go up again. It just repeats itself, until finally someone is left with the joker.
If you believe the Nikkei index, the value of Japanese companies had gone up 3 times since 1985. In London and New York, share prices had only gone up 60% in the same period. Only a few dared to query this.
The more I looked into it, the more suspicious I became. For example, I discovered that even though the market was rising so strongly, the underlying operating profits of manufacturers only grew 2% a year from 1980 to 1989. There was actually no growth in profits. From their core businesses, all the growth was coming from, financial gains in the market or lower interest rates. And that made me really suspicious. And then I looked around at what companies were doing with the money they were raising. Well, they were all putting it into brand new office buildings. That didn't sound very smart either. And then I talked to the banks about how companies were raising money, and it seemed that companies were raising money in the market and then using the proceeds to purchase the shares of other companies who were raising money in the market. And so it was a vast circle of money, but there was no real basis, no economic reality for the boom that Japan had.
The joker was about to be dealt. On the first day of 1990, doubts about the market spread, and share prices started to fall. Over the next 2.5 years, they dropped 63%, accelerated by another piece of unlucky timing. The Ministry of Finance had by now decided to act on land prices. They had sent out orders that banks were to limit their lending to developers. These measures, designed to slow down property speculation, ended up almost smashing the whole economy.
It was as though lots of cars were racing at a speed of 90 miles an hour. Several hundred of them, all bunched up. Leading them was the Ministry of Finance car. It suddenly braked hard, and all the cars behind went right into it. A major pileup. That was the burst of the bubble.
Land prices started to drop in September 1991, but the ministry kept its lending restrictions in place.
I remember that well, as I was in charge of the new real estate loan control. When land prices fell for the first time, we thought of withdrawing the restrictions. But most Japanese people would not have agreed with that. They thought that if we relaxed as soon as prices had dipped, they might easily shoot up again.
Instead, the price of property fell 2/3. The mania that had been consuming Japan stopped. Grand projects planned at the height of the bubble were cancelled. Anyone who'd borrowed against land found their collateral almost useless. Bankers who'd lent so much against land saw their loans could never be recovered, and the crisis was made worse by the way the establishment came together to conceal the damage. For 5 years, the Ministry of Finance and the banks conspired to hide the level of bad debt.
Up to 1993 or 94,